Good morning, everybody. It is Tuesday, June 14th, 5:47 a.m. Central Time as I speak here. July corn futures down 7 at 762 and a quarter. December corn down 5 at 716 and a half. July soybeans up 7 at 1714 and a half. November soybeans up 4 and 3/4 at 1538 and a half. July Chicago wheat down 8 and 3/4 at 1062 and a quarter. July Kansas City wheat down 6 at 1155 and 3/4. July spring wheat down 7 and a quarter at 1214 and a half. If you guys are listening on the podcast, appreciate it. If you're watching on YouTube, like, subscribe, leave me a comment, give me a crop update. Let me know what's going on in your neighborhood. If you need some additional information from me, go to my website, www.standardgrain.com. Check out my premium subscription service, guys. I send my premium subscribers a ton of additional content direct from me every single business day. If you guys like the YouTube channel, if you like the podcast, you'll love the subscription service. I promise. You'll get my morning email every single business day. That includes every overnight headline you need to be aware of, all my grain marketing recommendations, lots of charts, graphics, weather information. My subscriber-only videos are part of this. I did one yesterday regarding the stock market sell-off. Talked about some correlation, not necessarily causation, between the corn market and the S&P 500 in particular. If you guys are interested in this premium stuff, sign up today. It's $50 a month. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else, I promise. The U.S. stock market has entered bear market territory. The S&P 500 was down 22% from its January high, which was the all-time high back in early January at yesterday's close. So the textbook definition of a bear market involves a drawdown of 20% or more. Despite that sell-off, the index is still drastically higher, of course, than the COVID low that was posted in spring of 2020, which is right here on my chart if you're watching. So, yeah, we've seen a big sell-off here. I mean, grand scheme of things, big picture, you've still got a multi-year uptrend intact that I would argue began with the global financial crisis low back in 2009. So this is an ugly spike down, and it happened real quickly just in the last 6 months. And it's cause for concern for a lot of different things. Not only has the stock market sold off, the bond market has sold off in tandem, which is very odd. A lot of this goes back to the expectation for a more aggressive rate hike from the Fed tomorrow and perhaps in July also. Prior to Friday's inflation print, traders had expected a 50 basis point hike to the Fed fund rate this month, and that number will be out tomorrow. Now, financial markets have almost fully discounted a 75 basis point hike. Some analysts on Wall Street believe that the Fed could increase their Fed fund borrowing rate by a full percentage point tomorrow. So odds of a more aggressive rate hike have very much rattled financial markets. The S&P 500 again lost almost 4% yesterday. That's a huge down day. That was the lowest close since January of 2021. Your longer-term interest rates continue to spike. Yield on the 10-year U.S. Treasury hit 3.44% at its peak this week. I believe that was the highest since May of 2011. I think this has made its way into a lot of different markets. You look at grains, I think, should be rallying, in my view, on weather, and I'll talk about that here in a second. You look at livestock, they got beat up yesterday. A lot of commodities got beat up yesterday. So I think that this has implications for every market on the planet, personally. U.S. corn conditions declined marginally last week. The crop was rated 72% good to excellent nationally, down from 73 the prior week. That's still above the 68% average. Corn plantings near complete. The crop was 97% planted as of Sunday, right on par with the long-term average of 97%. Emergence in corn, 88% nationally versus 78 last week, 89 on average. Traders will continue to debate how many corn acres were lost or switched in the North Dakota in particular. That debate will be ongoing. We'll see a little bit more information from USDA on June 30th in that final plantings or planted acreage report, rather. But I think the debate will continue beyond that even. Soybean planting still slow in the north. North Dakota and Minnesota were 75% planted and 88% planted respectively, so still very slow up north. Nationally, the crop in soybeans 88% planted versus 78 last week, 88 on average. Soybean crop 70% emerged nationally versus 56 last week, 74 on average. In its initial crop rating, USDA rated the soybean crop 70% good to excellent nationally. That's above the 68% average, so a strong rating to start off the year. As with corn, acreage debates will continue here. What was gained, perhaps, in the northern plains? Maybe that's the question. Again, we'll know more on June 30th. U.S. winter wheat harvest pace is near normal. That crop is 10% harvested nationally versus 5 last week, slightly below the 12% average. Texas, Oklahoma, and Arkansas reported significant progress. Kansas was only 2% done with winter wheat harvest as of Sunday. Very little progress noted elsewhere. Spring wheat planting 94% complete, up from 82 last week, 99% on average, so a little bit slower again in the north. The spring wheat crop was rated 54% good to excellent nationally versus 61 on average in the first crop rating of the year. Got rains moving over parts of North Dakota, actually quite a bit of North Dakota, this northern part of South Dakota this morning. And then you've got a system kind of exiting the eastern Corn Belt here out through Ohio. Over the next 7 days, there's going to be some rain. Iowa, southern Minnesota, Wisconsin, a little bit of eastern Nebraska. Here we'll see some rain. Mostly dry in the Dakotas, dry for the southern plains, dry for the central and eastern Corn Belt for the most part, and very hot, of course. Here is your expected high temperature for today. Now, yesterday, some of these areas of Texas and Oklahoma, I think even Kansas, saw temperatures above 100 degrees. They may see more of that today. And this stuff in the 90s is going to work its way into Nebraska, even maybe parts of South Dakota, certainly Iowa, Missouri, Illinois, southern Indiana. A lot of the South is going to be hot today. And this heat is going to stick around for a while. Temperatures in the 90s will make their way all the way up to North Dakota and Canada by Saturday or Sunday. This morning's Euro run suggests that temperatures in the 90s stick around on and off at least until the middle of next week. You look at your 6 to 10 and 8 to 14 day maps, and they're not really offering much here. So you're very much above normal in terms of temperatures, below normal in terms of precipitation for a lot of the Corn Belt. 8 to 14 looks pretty similar. So I'm going to say the forecast is friendly, guys. I know I've been told, Joe, we could use some heat, but I don't think you need this much heat for this long. You know, if it were just this week, I think that would be one thing. But the idea that it could persist through the end of June is which is what it looks like to me. I think that could go from being a good thing for the crop to a bad thing for the crop very, very quickly if this heat continues. And again, the further you go out with the forecasts, guys, the less reliable they become. But the way it looks right now, I think this is kind of a friendly setup in regard to weather personally. That's my personal thought. Gas prices continue to move higher. The crude oil market has stalled a little bit here just the last couple of days. I mean, it hasn't retreated, but it hasn't been spiking higher every day. Prices at the pump have not weakened at all. AAA reported the national average gas price at a new record high of $5.02 per gallon yesterday or today. The national average diesel price also hit a fresh record $5.78 per gallon. To this point, you haven't really seen any material decline in gasoline demand. In fact, demand has really risen the last couple of weeks, which is pretty normal from a seasonal standpoint. But, you know, we may need to get to a price again that reduces driving habits. And I don't know what that price is, but we may find out this summer. Cattle market was lower yesterday. I think some of that had to do with the nasty action in the outside markets. $2 lower in live cattle, $3 lower in some of the feeder cattle contracts. The hog market was able to finish higher. In the outside markets, the U.S. dollar is just a little bit lower. The S&P and the Dow trying to rebound here. The S&P's up 18 points. The Dow's up 95. Bonds are up. Gold's down $7. Crude oil is up $1.20 at 122.12 in the July WTI. Everybody have a great day today. I'll talk to you same time tomorrow.